I'm reminded that in 2001, late 2000, when I was running Forbes ASAP magazine, my junior reporters, I said, this bubble's going to blow. It just can't keep going like this. And my junior reporters came in and said, Mike, you're thinking the old-fashioned way. This could go on forever.
Right.
And that was about 6 weeks before it all blew. So every time I start getting really optimistic, I got to remember that moment and kind of rein it in. But boy, it's been nice the last few years. I mean, to see everything going up continuously.
Right. And yet it's that comfort that leads to us taking our eye off the ball traditionally. And
You're
uh,
you're absolutely right.
yeah, all I can say is if we learn nothing from 4 years of Donald Trump back in 2016, is that, we're in for some unconventional times. We're in for some surprises. I just don't know where we go from here. And for a news person that covers the economy, that's kind of exciting. But for someone who's, trying to put people through college and, save some money,
Yeah.
it's a little nerve-wracking.
Hi, everyone, and welcome to the Silicon Insider podcast. Hey, Scott.
Hello, Mike. Let's do
Uh,
it.
it's crazy out there on the streets, so take plan on getting home a little late tonight.
On the street.
Okay. First item: Federal Reserve. Now, a lot of people. I've been watching various podcasts and all sorts of things, and people are saying the Federal Express doesn't. The Federal Reserve Chair Jerome Powell doesn't quite seem to know what he's doing right now. It's like the Fed seems to be as confused as everybody else. And they did come out this week and said inflation will remain higher all next year. And it is now only pricing in 2 rate cuts for next year. Okay, rather than the four that was expected back in September. Okay, well, the markets went nuts on that news, and stocks plunged. I think it was 3%. The Dow lost more than 1,100 points, making it the 10th day the Dow had had losses, which was the greatest since 1974. And that was not a good year for the economy. So everyone's really concerned. They're wondering if the Fed's reaction will impact Trump's policy making. It's all a mess right now. And the chief market strategist at B. Riley Investments said those projections and those rate numbers were like a massive punch in the face. Well, Thursday, the market recovered a little bit. I mean, it was like 0.1%. And I think it was even less than that for NASDAQ. Uh, And at this point, the Dow has lost nearly all the 2,800 points that it made in the year to date, well, at least since election day. So the market total now has only gained about 100 points since Donald Trump got elected, which is a real shock after the week after, or 2 weeks after the election, when everything was just flags were flying and the market was doing great. And now we're back to sort of square one. What do you make of all this? Is there any rhyme or reason to this, or is the Fed just trying to create a palliative for everybody's concern right now? Yeah, well, get ready, folks. There's going to be more inflation next year, but we're in command. And are they really in command?
I mean, it really depends how you see it. I think the Fed is playing a much longer game than most investors
Yeah.
even want to think about. And that says something about the investor mentality. You elect a would-be president more than a month, gosh, more than 2 months more than 2 months ahead of when he'll take office.
Yeah.
And the market moves as if there are already things put in place, which there weren't. But that's short-term thinking. The Fed looks ahead and says, gosh, job growth has been consistent, wage growth has been consistent, shoppers are continuing to shop, even through higher prices. And we expect that to continue for a year. In other words, we expect optimism and economic strength for a whole year, and investors sell off. That's very short-term thinking. If you knew in advance that you'd have a really strong year with, let's admit it, a very unpredictable president about to retake over the country, you'd say, wow, even 1 year of
Right.
strength, that's really good. I can ride that out knowing I'll be able to shop, knowing I'll likely have a job, knowing my wages might even go up. Would you sell off your stocks? I mean, come on. This is the
Yeah.
version of long game versus the version of the short game. And, I think if there's anything to take from what you said that may be concerning, it's the 10 days in a row that the Dow went down. That is a really long streak. And granted, it only lost something like 4 or 5%. So it wasn't a huge sell off, the likes that we've seen before.
In a
But
record
I
year.
think, yeah, I think it's a combination of profit taking, which makes sense. I mean, gosh, look at some of the stock prices we've seen. And at the same time, kind of okay, we've had our short term spurt after the election. Let's see some results to justify that. And really, the economy has just chugged along consistently, unspectacularly, which for many of us who try to think in the long term is perfect. But for a lot of people, they want news, they want excitement, and they just haven't gotten that jolt in a little while.
Well, let me go one step further, which is stockholders short term, real short term, like a mayfly there. That's how quick their brain works. That's how quickly they react. The Fed looks out ahead 6 months, 9 months. But there's another factor as well, which I keep hearing people bring up, but they don't know what to make of it, which is 4 years is a long time for steady market growth. There aren't a lot of intervals of that in American history. I mean, and the few times we had it, like 1923 to 1928, we paid for it. So
Right.
we kind of been gotten used to this sort of steady growth, these regular announcements that we do, everybody else does, that the Dow set a new record today. NASDAQ, it's 20,000, 28,000. It's like we've gotten accustomed to good news. When does the other shoe fall?
I mean, think about the times when other shoes have fallen. Like you mentioned, we've had runs on banks. We've had absolute failure of the American public to have confidence in the markets and the economy.
Absolutely.
Yeah, even in 2008, it was a huge housing crisis. The market got way ahead of itself in terms of who took out mortgages and who could actually afford to pay them, and the swaps. And go back to The Big Short, which is a phenomenal book and movie that taught me a lot about what was going on way back then. And I think we're not in that situation right now. I mean, you can say there are bubbles in some stocks and in cryptocurrencies and whatever, but a lot of what we're seeing now is confidence. Confidence often leads to overconfidence, and overconfidence leads to really bad times in the market. Are we getting there? I don't know. But when Chairman Powell, speaking on Wednesday or whatever it was,
Wednesday.
announcing the 0.25 change, said we dodged a recession. Full stop. And that's really interesting given that we had so much inflation spurred by stimulus and wage growth and all that stuff. But I think when you look at all of those doomsayers during that whole year and a half, job growth never really stopped. Wage growth didn't even stop. Shopping didn't stop. Yeah, we had to pay more when we did shop, but people were still willing to grind ahead with the engines of the economy because they could, because they were employed. And that was really, really important. And I don't know if that's who gets credit for that. Is it the stimulus plan during COVID? Is it the fact that even through the AI gloom and doom, it's going to take jobs? People were actually hiring jobs. I don't know. Salesforce just said, we're really going into AI. And as we all clutched our pearls, Mark Benioff said, and we're going to hire 2,000 people right now to sell that. So that's creating jobs. And so
Right.
there's a lot of optimism in this economy, even as people look for cracks in the economy. And so we just haven't seen that, I don't know, that sort of landslide that we've often seen that leads to really bad times yet.
Yeah, let me take two sides on all this. One of them is, yeah, we're probably due, given the business cycle. something's got to happen, and it's not going to be a soft landing. It's got to be fairly hard to make up for all of these gains over the last 4 years. But on the other hand, I'm reminded that when I was a kid, it was still common to read about a plane crash every couple weeks, it seemed. And a lot of people died taking airlines in those days. They instituted a number of controls. They instituted a lot of processes where uh, they would revisit what happened and learn from it. And now plane crashes are an absolute anomaly in our lives. The controls and the process of continuous improvement worked. So on the one hand, I can say, yeah, we're due for a big one. On the other hand, I'll say maybe we have enough controls in place. And I was reminded of that when Silicon Valley Bank disappeared over a weekend, and we recovered from it without even losing a step. That maybe we have institutionalized enough processes and controls and continuous improvement programs that we're making these vacillations in the market more shallow.
That's a really good point, and I like your SVB example of that because a lot of people thought that was going to crater the whole economy, and it didn't. The only pushback I would say is 2008 when, these credit swaps and whatever people were doing with the bad mortgages did
Right.
seem new, and 2008 wasn't that long ago, and
Yeah.
so it seems like there are still ways that we as a society can be surprised. But you're right, there have been enough things that have gone on where we've covered our bases and learned from those things over and over. But look, I mean, we're in an era right now where cryptocurrencies are trading at record valuations. People
Right.
are considering them asset classes, not crazy schemes, but actual asset classes. And it wasn't that long ago that crypto caused a huge meltdown in the crypto industry. Remember, FTX closed. Crypto, Bitcoin went from like 65,000 to 16,000. It was a
Yep.
huge thing. And the stock market didn't move much. The rest of the economy didn't really, go
Right.
into convulsions.
Barely blinked.
Yeah, and so I wonder, does that mean the next, crypto concern will or won't affect the market? Have we learned from these things? It's a great point that you make. I just think that there will always be ways that we as a society
We'll
can
find
be
new ways
surprised.
to screw it up. Yeah.
Yeah, that
But
too.
I have to, at the same time as I say, hey, maybe we got things fixed. Maybe things are running better. I'm reminded that in 2001, late 2000, when I was running Forbes ASAP magazine, my junior reporters, I said, this bubble's going to blow. It just can't keep going like this. And my junior reporters came in and said, Mike, you're thinking the old-fashioned way. This could go on forever.
Right.
And that was about 6 weeks before it all blew. So every time I start getting really optimistic, I got to remember that moment and kind of rein it in. But boy, it's been nice the last few years. I mean, to see everything going up continuously.
Right. And yet it's that comfort that leads to us taking our eye off the ball traditionally. And
You're
uh,
you're absolutely right.
yeah, all I can say is if we learn nothing from 4 years of Donald Trump back in 2016, is that, we're in for some unconventional times. We're in for some
Yep.
surprises. I just don't know where we go from here. And for a news person that covers the economy, that's kind of exciting. But for someone who's, trying to put people through college and, save some money,
Yeah.
it's a little nerve-wracking at the
Yeah, if
same
I had a
time.
pension right now, I'd be a little concerned. So
Well, right, right.
okay. The big loser this week. Wow, they announced on Thursday Micron Technology. Wow, they warned about near-term demand issues, and that's putting it mildly. B of A analysts lowered their rating on the stock and cut their target price. Citibank lowered its estimates for Micron's fiscal 2025 and 2026 earnings. I mean, that's like the scarlet letter when you're already predicting doom for 2 years ahead. Um, and the stock recently traded about their lowest level since September. And it's because the chip maker warned about softness in consumer-oriented markets. And well, they had a quarter revenue of 7.9 billion, well below estimates, and the stock went down 16% to below 88, their lowest since last summer. So it was basically the top decliner in the S&P 500. What is going on at Micron?
Well, I mean, this is a stock that really soared in the summer, even of this year. I mean, this is a stock that's been cut in half since June, but it really did soar, I think, on the back of a lot of chip strength. And we've seen when the chip stocks got hot, some of them really took advantage and ran with the baton and said, great, we're full on into AI and we get it. And we're going to, do our NVIDIA thing or, become Qualcomm or Broadcom or whatever. And others, as we've seen, sort of stumbled with the ball. We've talked a lot about Supermicro, and I think Micron Technology is one of those where they really had a run, but just couldn't deliver on that optimism. And they're still doing all right. I mean, they're pretty much flat for the entire year, but for the last 6 months, literally cut in half. It just shows you how optimism can come crashing down if you don't deliver. And we've seen other stocks do this just on the backs of such optimism and promise, but you even miss a wee bit of the forecast and you'll pay for it.
Well, I think the key word here, correct me if I'm wrong, it's consumer.
Yeah,
That the consumer market they're saying is going to be soft.
right. And Micron is more of a consumer play than, say, NVIDIA or a
Yeah,
lot of
it's
these
not
other
making
companies that sell chips.
they're not making super chips. They're
Right.
making stuff for, you and me in our television set, our
Well,
car.
and right. I mean, I guess we're at the tail end of the big consumer season for things like computers and iPads and tablets and phones and stuff. They should have already been sold by now.
Right.
And if the analytics come in soft, right, who pays for that? Not just the hardware guys, but the chip makers in the consumer market. And that's why it hurt Intel so much that they remained focused on the consumer market as it was slowing down instead of the AI and super fast server market as those were speeding up. And it really is sort of where you put your, well, chips.
Yeah, well, if there's one thing that Intel has taught us is once you make a wrong turn towards whatever market, if that doesn't work, it's almost impossible to turn around and get back. I mean, Intel's been, I went out to lunch 20 years ago, almost 25 years ago, with some Intel executives. And they said, yeah, we screwed up. We went after networks instead of, phones, but we're going to turn it around and get it back. Well, they never did. And now they're missing AI. I mean, if you go off on the wrong road in the chip business, you're kind of doomed.
Yeah, I mean, and Intel taught us that a long time ago. You're right. I mean, you've got to focus correctly, but also, I mean, think about how hot these chip stocks were in the summer, and some have remained close to there. But even Qualcomm has fallen back. Intel just got beaten even more. Micron, Supermicro, some of these have really fallen off. There was a big run up, and the kind of run up that, what does it say, floats all boats. But
Yes.
not every company could deliver on that promise, and so if you bought at that level and then held, you've lost half your value. And that's why, timing this stuff is so hard. But you just have to deliver as a company. And even if you're floating with all boats, it doesn't mean it's going to stay afloat.
You can just see those brokers and those big exchange houses back on Wall Street, and they go, NVIDIA's taken off. What do they do? Oh, they make chips. Oh, who else is in chips?
Right.
Let's make a play for all of them. Yeah, and it catches up. And even NVIDIA is all of a sudden not quite the darling it was. So, maybe bringing a little rationality back to the market and could be helpful. Though
Well, nothing makes that rationality.
I'm sure they love the money.
Right. 10 days down in a row is sobering to people, definitely.
Yeah. Okay. Next, Amazon workers. Now, I don't know if you've seen this, but I haven't seen it. Amazon workers across 7 facilities, New York, Georgia, California, and Illinois went on strike Thursday.
Yeah, we covered that. Yeah, absolutely.
Yeah. But I mean, I was out there on my driveway. I opened my front door and it was almost completely closed off because of boxes. And the FedEx guy and the UPS guy actually passed each other on my driveway, kind of, hey, how you doing? I don't see any impact of the strike. I know why the Teamsters did it. They basically got the green light from the president-elect. They go speak at the Republican convention. They figure if they're going to do this, let's do it now while we got them in our corner.
Right. But a strike like this takes time. I mean, I don't know. And by the time people are listening, there may have been some progress or whatever in the Amazon deal. I think it just started Thursday afternoon or something. And it's obviously timed when all the deliveries are being made. And so it could do some damage to Amazon's reputation. But I just don't know if the Amazon effect trickles to the actual delivery trucks, or if Amazon can get enough packages into those trucks where they still make it to your porch in time. That's right. The big question, whether or not the consumer will know.
And as for holiday season, you don't strike when it isn't going to hurt management.
Right.
You're trying to get the best deal you can. And if they're looking at warehouses full of undelivered gifts, that's kind of a motivator. That's going to get people in the executive row thinking, we got to do something about this. Give them what they want. So we'll see next few days. Okay, the average rate on a 30-year mortgage in the U.S. rose this week to its highest level since late November, which isn't that long ago. But it's reflecting a recent uptick in bond yields that lenders use to price home loans. So it rose to 6.72 from 6.6 last week. That's not a bad jump. Said Freddie Mac. The rate is now higher than it was a year ago when it would average 6.67%. Interestingly, there are more houses for sale right now out there all over the country. So you would think it would drive it down, but in fact, it's climbing a little bit because the bond market is going nuts right now.
Well, this is sort of right. What you started the show with was the short term versus the long term. Short term trend for mortgage rates is higher, especially after Fed Chairman Powell says next year, fewer interest rate cuts than expected. That made the mortgage rate shoot up a bit. But, the long-term trend is, hey, we've seen more houses on the market. If that continues, that's good news because that means more competition and perhaps lower prices. But yeah, tracking these mortgage rates day to day, week to week is just so hard to do. I mean, they go up incrementally, but they also go down incrementally. And I think what ultimately drives the market is people who have been saving money who are like, you know what, 6.7 versus 6.9 or 7.1 or whatever, we're in. If we can refinance, we'll refinance, but we want to get that home because we have plans and kids and blah, blah, blah.
And that's the key word is refinance because, half a point on a mortgage over 30 years or 40 years is a ton of dough. And so I can see if you're buying, you're quite nervous about this. For the rest of it, it's like, fluttering in the breeze, going up, going down. We'll see. Okay. You want to bet if it's going to go up or down in the next month?
No, I don't want to bet. Are you kidding
me? Yeah, good for you. All right. As United States and China semiconductor tensions escalate, because I think as you probably covered, if you haven't, you probably will very soon. United States is talking about banning Chinese-made routers. There's like 50 million of them in the United States in people's houses and in businesses and everything else. If they ban that, it's going to make a lot of money for U.S. router makers because they actually charge more. But it's going to create even more tension on this embargo, tariff thing. And one of the companies that might find itself caught up in all of this is NVIDIA. And because NVIDIA turns out they're selling their stuff everywhere now. And if there's a real concern that China's using this stuff to either listen in or to steal the intellectual property, it could have a lot of damage. The product that most used in the United States as a router is TP-Link. Okay, so if you have one of those, it may be banned. They may turn it off. So it'll be interesting to see that NVIDIA could be fighting against the United States government over these controls. I mean, everyone's been thinking, oh, this will be great, but NVIDIA makes $10 billion a year off of its international sales, and that would hurt if they were banned from doing that.
Right. This is where political pressure comes in from companies. I expect we'll see that. Again, we're getting ahead of ourselves, but these are legitimate concerns. And, we talked a lot about tariffs. And yet I still have people come up to me and say, gosh, I had no idea what a tariff was, that it's actually inflationary. So we're going to have to deal with these things eventually. And it's not new to say political pressure will be felt, or, companies will put pressure on politicians to try to get their way. And I think we're just beginning to see this and talk about this. And, the Elon Musk of it all, using Twitter and lots of money to try to put pressure on incoming President Trump. I mean, this is going to be around for a while. This is going to be a theme. And I'm curious where it goes. But the China thing is real. Look at TikTok. This is not new. This is one of the few things that unites both parties, is fear of China and what it might do with our data. And that's why we're in this.
Well, I think that's why we have all these CEOs heading back to Mar-a-Lago to, kiss the shoes of the new president-elect in hopes that Winston Churchill, the sheep that believe that they'll be the last one the wolf eats if they keep them, if they're friendly to them. Yeah, I think they're trying to insulate themselves from the TikTok effect. Speaking of that, that's only 3 weeks away.
January 10th is when it goes in front of the Supreme Court. January 19th is the date by which the law says it has to divest itself from ByteDance. It'll be a really interesting couple of weeks.
So you can't get a Supreme Court ruling that fast. It's got to be just a delay, a stay.
I don't know. I don't know what it means. And it seemed like it's getting in front of the court pretty quickly. But I don't know how long the Supreme Court will take to rule. I don't know what happens on the 19th or the 20th. But I also can't imagine a world without TikTok, even though it hasn't been around all that long. It's just so big and powerful and makes so much money.
I find myself on TikTok just dipping in. 3 hours later, I climb out of the pool.
It's a powerful algorithm, Mike. Yeah. And it's one of those things where people say, oh, it's the kids. It's 170 million people. It's a lot of people over a very wide age.
It's a lot of grown-ups. It's a lot of 100-year-olds. So, I mean, yeah. Okay, so, well, we'll see. January is going to be interesting. It's going to set a precedent for how you deal with companies that are essentially part of one of your adversaries.
Right.
So, okay, and finally, this is wild. Honda and Nissan are in negotiations for a merger. Now, when you think of those two companies, you think these are the biggest companies in the world. Nothing can stop them, but apparently one thing can. Chinese automobile industry. That Honda and both Honda and Nissan have suffered pretty sizable quarterly losses recently. And it's because the Chinese, well, you could say the Chinese are dumping, but they're also manufacturing in enormous numbers. And we don't feel it here because they're embargoed in the United States. But Russia, my understanding is that because the Chinese cars are so cheap, that the only cars being sold in Russia right now are Chinese EVs. And, it's happening all over the developing world. And so Honda saw a 15% drop in quarterly profit, and Nissan is getting ready to cut 9,000 jobs. I mean, these behemoths have seemed unstoppable since the oil crisis in the 70s. You know, I've driven both companies' cars at various times in my life. Is it possible these guys are going to actually merge together just to survive against China?
Kind of makes sense that they may have to. Um,
Yeah.
and this is one of those things where by the time you're listening to this, we may know the answer.
That's
But
true. That's true. And
it'll
one fact is clear. The Japanese economy, cars are the most important thing in that economy in terms of their economic strength or weakness. They can't they can't lose either one of those two companies or have them fall into, on the wayside. They got to prop those guys up. I bet I'd be surprised if the Japanese government, the Diet, didn't put up some money to help ease that merger along.
I don't know. It's been, Honda's strong because it's big. Nissan had a really big hit in the early days of EVs,
Yeah.
and then just didn't move for some reason. Kind of rested on that same car's laurels, and that's surprising. So they've therefore fallen behind in an
Well,
area where they were.
didn't they consciously say we're not going to build pure EVs because we don't know if that's going to work or not? I mean, I
That
think
may have been
Nissan didn't want
Toyota
to do it. Honda went all the way in, obviously from the beginning, but not Nissan.
a little bit, and I think you may be thinking of Toyota, but yeah, Nissan slow pedaled it after the Leaf was so successful, and yeah, to hear that they're struggling with sales and laying off potentially so many people, that's a true sign that they need some help, and maybe Honda is the hand that saves them. And yeah, it would be a real change from what we knew, even before the 80s, but certainly 70s. Those two companies were really, really gigantic and influential. And now they're behind the times. And that's what happens when you fall behind.
So do we see this next in Germany? I mean, there's always already been a lot of mergers of car
Yeah.
companies in Germany, but VW shuts down its first factory in Germany since the company was founded. I mean, they seem to be getting hammered by China too. And I would assume France is in the same way and Italy.
I don't know. These are not companies that we see cars on the road from as much as we used to.
Right.
Full stop. I don't know how else to say it.
Yeah. When was the last time you saw a new Fiat
Right,
on
or a
the
Renault
Bayshore Freeway?
yeah, exactly.
Okay. So holidays are coming up. This is a busy time for you at the station. So we'll sign off now. Wish everybody a happy holidays and say that's it for now, folks. You can see Scott uh, everywhere, but you can see him on the NBC Bay Area a whole heck of a lot next week over the holidays, and you won't see me at all. We'll get back to you at the beginning of the new year. Have a great one. Bye bye.